All right. So again, welcome everybody, and thank you for joining us today. And also a warm welcome and a big thank you to our guest panelists who are tuning in from all over the world and all sorts of time zones. And special thanks to Yuan, who's here very late in the evening in China. So I'll quickly introduce the panelists, and then I'll really hand over to them to give short insights into their local context when it comes to energy, electricity, and decarbonization. And then we'll have hopefully plenty of time in the second half of the session for questions. And again, I've put in the chat there a link to Slido where you can post your questions and upvote other people's questions as well. So I'll crack on. So again, thanks everyone for being here. So our first speaker today will be Yuan Yao, who is an associate at RMI's China program, primarily focused on the coal transition, renewable energy integration, and system impacts and power market analysis. Prior to RMI, Yuan worked as a senior analyst for a DC-based energy consulting firm, as well as having worked on spatial modeling projects for China's transportation sector and for Global Forest Watch at the World Resources Institute. So thank you, Yuan, for being here. Yagavanta Ningtaojam is a manager with RMI India. He works on electricity, hydrogen, and battery-related work streams. Prior to RMI India, he worked with the World Bank Group and the International Finance Corporation in the energy and climate sectors, looking at carbon pricing, mining, power systems planning, and urban transportation. And he also has worked as a research associate on nuclear power, gas, and renewable projects in various geographies across Asia. So again, thank you, Jagavanta. And finally, Tishan Palazzi is a co-founder and COO at Mist AI, which works to create highly accurate forecasts for electricity demand, renewable production, and market prices. Prior to founding Mist, Tishan was a manager in the electricity practice at RMI, where he helped utilities to evaluate and procure solar and battery storage systems. And prior to RMI, Tishan worked in engineering at Nest and First Fuel. So I hope you'll all agree we have lots of fascinating and intense expertise in the room. So looking forward to hearing from them. And that's enough from me. We'll go to Yuan first.
Great. Thank you for the introduction, and thank you everyone for joining us today. So I work for the RMI China Power program, and today I'll be introducing a little bit on China's power sector reform towards carbon neutrality. And let me, is it possible for me to share slides, Lam?
Yes, sorry, let me check that I've set that up properly. My apologies. You should be able to now.
Okay, perfect. So hopefully the slide is going through. So can you all see my slide here?
Yes.
Yeah. Okay. Perfect. So, so very quickly on China's power sector reform, I think we all know that China has set very ambitious targets towards carbon neutrality and carbon peaking. So this is very significant for the power sector as well. So President Xi announced that China will peak carbon emission by 2030 and reach carbon neutrality by 2060. Of course, this means decarbonization will happen across all sectors. But because the power sector in China accounts for around 40% of the carbon emission, we think that decarbonizing the power sector is very significant. And as we see many other sectors such as transportation electrifies, the power sector will be very essential for China to reach carbon peaking and carbon neutrality in 2060. So here I put one report RMI China program has wrote, because we have limited time here. So if folks have details, want to read more about details, you can look at our website. But today, I think I'll be giving a snapshot of what are the challenges and opportunities for China's power sector specifically to reach carbon neutrality. So I'll talk about 4 different aspects. The first one is on power sector reform progress. The second is on renewable energy development. The third is on corporate side or private sector driven demand. And the last one is on policies towards zero carbon power system in China. So first I want to mention China is kind of unique in its policymaking progress. So usually we see that the national government put out guidances on how China in general will reach carbon neutrality in the power sectors, such as limiting coal power plants, accelerating development of renewables. However, because China is kind of big and there are many provinces, I want to mention that the power sector reform also differs by provinces. And these differences are quite significant because depends on where you're developing renewables, it can mean different revenue streams for you and for the investors. So in terms of renewable energy development, in the context of power sector reform, there are other drivers that are crucial. The first one is on economics. As we all know, on a positive side, the cost of renewable energy has been declining across the globe. And the graph on the right here, I want to highlight, if you see the solar PV and onshore wind LCOE in 2020, we can see that they are pretty competitive compared to coal power plant, which is the gray, dark gray column right here. So from an economic standpoint, it makes sense for China and for investors to continue investing in renewable energy from now on and towards the future as the LCOE for renewables continue to decline. And of course, economics are important, but policy drivers in China is also very, very important. As I mentioned before, China has very ambitious carbon reduction targets, and there are many national and provincial policies to make sure this will happen. So here I highlighted one of the key policy which China uses to mandate these provinces to consume certain percentage of renewables. So on this graph, I select a couple provinces and the national renewable portfolio standard. So as we can see here, China's target really is to reach around 40% of renewable energy by 2030. So this is quite ambitious. And as we can see, each provinces, they have a different starting point, but the national government is saying that you have to all reach 40% by 2030. So this is quite ambitious, and it's a little bit challenging for provinces as well. And more importantly, the RPS targets are really the bottom line for the state, for the provinces to fulfill these consumption targets. And based on our experiences in China, we see that in most cases, provinces will exceed these targets and over-deliver. And what does this mean? This means that realistically, it is very likely that China will hit more than 40% of renewables in 2030. Of course, this is based on current experience. So this is very important because policy and economics are two of the key drivers that will motivate renewable energy development in China for China to fulfill its ambitious goals. However, private sector demand is also very crucial. As we see internationally, there are more international corporations with sustainability targets, or if they joined RE100, have supply chain in China, there is increasing demand for renewable energy procurement internationally, and China's market is pretty big as well. And here I highlighted 5 major ways for corporates to purchase renewables in China. And to put it more simply, I think the easiest way for international corporates to procure renewable is through the purchase of RECs, which is the renewable energy certificates. In China's context, is called green electricity certificate. So this is one of the easiest way for corporates to do this. And of course, if corporates have lots of money, they can also directly invest in utility scale projects. And we see this pretty frequently as well, such as Apple. They have done this in China. And if we compare to North America, so we see a lot of corporates like Amazon, Microsoft, they tend to sign multi-year power purchase agreements with developers directly. So in China's context, there are some pilots for those multi-year contracts. However, the mechanism is still under development. And we see pilots in some provinces, but there's no established mechanism to enable this on a large scale at the national level. So only here or there we see some pilots. And this is very important because corporate or private side demand is also a very important driver for renewable energy sustainable development in China. And lastly, I want to mention many folks ask us about carbon markets in China because it's recently started. China started its national carbon market. And as a reference, the trading price is at around 50 yuan, which is roughly less than $10 per ton. So it's relatively low, but we think that the carbon market is also another very important policy driver or market mechanism, which will be crucial for renewable energies development because it really puts a price on carbon and level the playing field for all the power plants in China. And this will mean a lot to the renewable energy assets, especially for the newly built ones in China, because this means they will receive a higher green premium through the REC system. But the current kind of design of these two markets are very separate in China, and this makes accounting for these environmental attributes very difficult. So in terms of policy design, the design of carbon market and REC market will also be very important in terms of accelerating renewable energy development in China. So I want to leave time for Q&A, so I just want to quickly sum up here. It's very complex. China's power sector transition towards carbon neutrality. There are many elements that are important to consider. Like I mentioned above, there are policy drivers, economic drivers, and also infrastructure upgrades China needs to implement to make sure the higher penetration of renewables can be accepted by the grid. So it's really a mix of actions that China needs to consider and keep modifying to make sure that the development of renewables is sustainable. And we will continue to attract both private sector and public sector investment to make this happen. So I will stop there and hand it back to you, Lam.
Great, thank you, Yuan. Let's move straight on to Jagabanta, and we'll collate all our questions for the Q&A after all three speakers, and I'll just put in the chat again the link to Slido there. So over to you, Jagabanta.
Thank you, Liam. I'll just share my screen as well. Hello, everyone, and thank you, Liam, for the opportunity. So one sec, let me just, so whenever folks are able to see my screen, give me a thumbs up. Yeah, great. Yeah, just putting the full screen. Great. So I'm going to talk a little bit about and give you a flavor of what the Indian power sector is like and the various challenges in the simplest of possible terms, because it's a fairly complex topic, unpacking the power sector of a country. As we heard Yuan talk about China, a country as big as India. It's a fair bit challenge, but I'll try my best in the simplest of terms. Now, Just a very brief summarization of what are the issues that are across the value chain that we encounter in the Indian power sectors. And this, I'm assuming people are aware of how the value chain across the electricity sector works, all the way from distribution to all the way from generation of power to distribution. So we have tried to classify this under the different style of challenges that we face in India, from operational and managerial to technology to political and regulatory, and it's a fairly system level problem. On the first side, on where electricity is generated, multiple problems set. First thing is challenges, I would say. The cost optimization is not highly optimized, because there's a lot of legacy, what we call power purchase agreement, that was signed in the good old days, that constrained people at a suboptimal power purchase rates right now, which doesn't make allow for a good equilibrium between distribution as well as generation. A lot of the plants are older and are still operating, which makes them not very flexible. And the last point, of course, is as renewable grows, as everyone is aware of, there is the need of integrating those renewables. So there is a challenge of curtailment that is emerging in many parts of India. Between where power generated and power is distributed, there is the lines and the transmission and distribution infrastructure. And this is where a lot of the issues are, which to do with technical losses. I would say technical and financial losses at a national level is roughly around 20-25%, depending on the year, which means almost a quarter, 1/5 to a quarter of your electricity is actually wasted in the wires, or because of lack of payment. The more interesting part, where everything hinges on ultimately, where the crux of decarbonization challenges in India is the poor state of the distribution companies. And this is both a technical challenge as well as a regulatory and political challenge, but also an operational managerial challenge at the level of the organization that's functioning in. So India functions in this very complex regime, where there are multiple players, private players, and public players, state level entities. Because of the nature of the consumer base as well as the geography, you don't have a very efficient way to collect, bill, meter, and collect revenues. Ultimately, it's the money, where the power is flowing from the generator, money needs to flow back from the distribution back to the generator for the system to work and the equilibrium to and the system to be profitable or financially viable to sustain itself. So the biggest challenge ultimately at the end for the in-power sector is the poor financial conditions and the worst of the distribution sector. Now moving ahead, that was a summary, and a lot of my rest of the slides are going to reflect back to those points that I've raised. The first point, of course, is it's a robust, extremely high growing electricity sector. And as you can see, it is our own projection. It could grow easily, 3 to 4 times of current electricity demand by 2050. And you might say it's a humongous growth in demand as we become richer, but as you are aware in the climate debate, the irony is that it remains highly energy poor. So if you do the projection of this growth of electricity demand on a per capita basis and compare it to where the US is, Japan is, China is, we don't even hit China's per capita demand of 2014 till like 2045. So this is the very interesting problem set that the world in general faces, but India and the global South in particular, about like how do you solve for climate change in also an area where you're also struggling with energy poverty and the need to provide more energy to your population for economic growth to be sustainable, right? So that's a very macro set of problems. Now let's see where we are when it comes to greening the grid in a very macro level. We have done a tremendous job. We have almost, I would say, almost 30% or so of our electricity capacity, not generation, renewable. Coal has reduced drastically. It has grown. It has grown a lot in absolute term, but the share has gone down drastically over the years. But the generation remains still very coal heavy. It's almost 70%, 65 to 70% of power generated in India is still very coal driven. Now, the government has set a very ambitious target of 450 gigawatt of renewable by 2030. Now, this is extremely ambitious, extremely crucial, to decarbonizing the electricity sector in India with such high, target setting rate. But it also introduces a lot of challenges, both technical in terms of how do you integrate all these renewable into the systems, which is universal, but also what to do with the coal assets. How do you retire it? How do you, as you can see in the chart on the right, essentially it is basically how your utilization rate of each type of power plant. Coal has gone down from 73%, running 73% of all the time, to 55% in a matter of 10 odd years. And that's drastic. That makes assets, existing assets, fairly uneconomical to operate. So there is a challenge of what to do with existing assets, because you have already had those infrastructure on the ground. How do you integrate renewable more? And then this concept of flexibility, which means how do you balance these new resources together? So that's for this thing. Let's look at the transmission and the distribution side a little more in depth. On the transmission side, I think that's one of the strongest suit of the Indian power sector. The country as a whole operates as a 5 regional grid, but it has become interlinked over the years, and it's becoming, the regional interlinkages are becoming stronger with capacity, with growing inter-regional transmission capacity. This bodes well for decarbonization and renewable, because renewable resources are not equally distributed, as we will see in future charts as well. So to be able to transmit those and integrate those renewable geographically is going to be a big factor in how we treat decarbonization and renewable integration challenges going forward. The graphs on the right and the points on the right are essentially looking at distribution sector, which is where you sell and bill for electricity, and it's the consumer facing end, and that's our weakest link, as I said in my introduction. It's not that we haven't had big achievement. Our biggest achievement to date has been as a country from the global south, fairly developing, we were able to achieve 100% household level electrification. That's a tremendous achievement, but it also introduces challenges, because it also means the newer consumer base are mostly rural and in far-flung areas, and serving those consumers also means financially, and they usually are low-paying or no-paying consumers which are being onboarded, which stresses and the operational and financial functioning of the distribution companies. But there has been gradual improvement. It's not that there hasn't been improvement on the ground, but many of the problems are still remain persistent. We have one of the highest system losses in the world right now. The global average is around 8%. India, however, is around 20%, which is a lot. Most distribution companies, especially the public ones, operate to a degree in financial losses, or even if they are profitable at margin, they usually tend to be highly subsidized by the government directly or indirectly. Subsidy is a big part of what deters reform in India. Then you're looking at as states' own finances gets challenges, their ability to support distribution companies' improvement also gets challenges. Then the last point I want to make, which is not in the chart, it's with respect to do with the agricultural segment, like especially when it comes to subsidy. A highly subsidized agricultural sector with free or extremely subsidized electricity doesn't bode well for both discom finance as well as things like water table, over pumping, etc. And the bigger and as we will learn further, this also has a lot of consequences in the utilities, which in this case, distribution companies, ability to purchase renewable electricity as more penetration increases, right? So, and then, but it's not that the sector reform haven't happened. A lot of effort have happened in reforming the sector, introducing more market practices. But the sector, which I have been, is, market improvement and performance of distribution sector has been lacking. One big factor is, of course, to do with the fact that it's not a purely commercial enterprise. It's a social commercial enterprise. There's a big welfare element to do with provision of electricity and electricity related services in India, as anywhere in the world, and particularly, but more so in the global South. What remains challenging are to do with aspects to do with privatization, cost rationalization, subsidy reduction, and the agricultural sectors are very difficult because there are politics associated with it. The focus so far has been on access improvement, infrastructure improvement, and financial bailouts with varying degree of success. So this varying degree of success, when it translates to the profitability of the discoms, power distribution in the country overall, has been negligible. So this is a losses graph. So basically, the lower it is, the more profitable the utility tends to be. So the higher it is, it's more unprofitable. So we can see like all the reform efforts in the past, these are just period of major reform efforts. Some improvement at the beginning and then it bounces back. So the underlying structural issues of the sector hasn't been really challenged by the reform efforts. And this is the biggest challenge for decarbonization in India. The reason being, ultimately, these are the people who are going to buy your renewable electricity and make that renewable market work well. And with a utility sector which with poor financial health, it is extremely difficult to make that work. And there are multiple factors. I can go into a Q&A section. I'll just skip in the interest of time. Now, this is where I would like to end, is where is all this situated in the context of developing challenges? What are the developing challenges as we go forward? And within all this, the first thing is, of course, as I mentioned, renewable integration, 450 gigawatt of 2030. It means introducing new technologies like battery storage, yes, but it also means making them work through market mechanism, through reforms in procurement, etc. The thing is, the second part is, of course, the load profile is also evolving as more renewables get introduced. So integration also becomes challenging. Then the second point, challenge is to do with the growing load. And the first point is very, very crucial, it's highly overlooked, is to do with the growth in cooling demand, especially with climate change and impact on extreme weather events increasing. As heat, especially in northern India, you're going to see a lot more growth in cooling demand as you go forward. That means you're going to have a much more peakier load profile and energy demand challenges going forward, and that has a lot of procurement challenge. The chart on the right is a very complex chart. I can break it down if people are interested. I won't get into it, but it tries to elucidate those points. Second thing to do with coming of vehicle electrification. If you don't manage it well, it's bound to have impact on the same demand profile that I spoke of. The third most important developing challenge is to do with climate resilience. India is the fifth most vulnerable country in the world to climate change. Extreme weather events are becoming more common. Your floods, your coastal cyclones, etc., are becoming more common. And the energy sector is also becoming more centralized around the electricity system as you electrify multiple previously unrelated value chain of the electricity system, like the transport or your buildings or cooking. So everything is becoming centralized around the vulnerability of the electricity system. And building resilience into those systems has operational costs. And the last part is, like, when you look at a country like India, just as when you look at a country like China, there's no one size fits all. It's a huge country with multiple challenges at different level. Issues affecting clean energy growth are spread out and concentrated in certain geographies. in some of the states, we have European level of renewable penetration, in more so than a lot of European countries. Same challenges in a much poorer country. If you, of course, balance it out across the country, it feels like we have a lot more to grow on renewable, but some of the high renewable states are pretty saturated. The second point is all these utilities that I spoke of, I try to paint it as a broad stroke, but they're all at different level of system efficiency and development. As such, would require different set of responses. They're not all on the same page. Some are fairly advanced, while some are lagging in a different state. Now, that's the general thesis, the point I wanted to leave you guys with. The only point I wanted to make is that it's not that a lot of effort is still happening on the ground in India, including development in the wholesale market and power procurement practices to, help, renewable integration be better, introduction of, better, technologies on flexibility, including thermal ramping, geographical integration, including a renewable market, which allows for trading of renewable energy credit and introduction of assets like battery energy storage. So a lot of effort is happening to make that decarbonization possible. But one has to keep in mind that underlying deep structural issues with how the sector is financed and how the sector is made financially sustainable will continue to make that decarbonization goal elusive if we don't handle it. And this doesn't only apply for India, it applies to a lot of countries in the global south where utilities are quite challenged. So with that, I'll pause and pass it back to you, Leon.
Thank you, Jagabanta. Very, very detailed, very comprehensive. Thank you. Let's go to Tishan, and then we'll have time after that for questions. And I'll just remind folks in the chat, if you want to add questions via Slido, we'll collate them there. Over to you, Tishan.
Amazing. Hi, everyone. My name is Tishan Palazzi. I'm a co-founder of MIST. And in a prior life, I worked at RMI. So you have a full stack of RMI folks. And one of the fun things is to see these presentations. Joan and Jagabanta, this was really amazing. I will stay at a sort of like shallower level for now, which gives us more time for the Q&A. But we'll maybe highlight verbally some of the things that I see as different in the US. Liam, I'm also going to share my presentation. Let's see if I think I already have access. Thank you. Is this coming through?
Yes, looks good.
Right. So maybe what I'll try to do is just explain what are the challenges that we see focus mostly on the US grid. I think this generally also applies to the EU grid. And then what are sort of like the paths going forward. And what was interesting as I was listening to the Chinese and the Indian challenges is I think some of these actually are the same. Others are quite different. I bet this will make for some interesting Q&A afterwards as we try to contrast these things live. So maybe I sort of like see three key challenges as we're trying to move towards a high probability of staying below 1.5 degrees Celsius of global warming. Specifically when it comes to the electric grids. I think one is we have more variable renewables, which as one of the sources I find very helpful is Bloomberg New Energy Finance's New Energy Outlook when it comes to target setting. And they say that we need about 1 gigawatt of new yearly installations of solar and wind globally. This is not US specific, which, just contrasting that, Jagabanta, to the numbers that you mentioned, 450 gigawatts by 2030 in India, that shows you the like sheer size of required renewable deployment. And as solar and wind vary with the resource profile of the sunshine and the wind blowing, that creates for challenges in running an electric grid, both on the reliability side, but also on economic compensation of resources. I think a second big challenge, and this may be more of a US thing, but is the sort of like shift from a mostly centralized system to a system with potentially billions of nodes. And this becomes particularly relevant as you think about operating such a system, sort of like I think this is a place where really technology is part of the solution, as is market design, in the sense that there are many industries where we can learn from, right, where systems are managed with billions of nodes. Think about sort of like how the internet is routed. But that is certainly a complex thing because it requires a completely different paradigm. If one thing I've been fortunate to do is I've visited quite a few of the system operators in the United States. The United States has 3 central grids, but there are, I think, 7 independent system operators. And if you go to those control rooms, they're still mostly essentially set up from a perspective that, you know, there are maybe on the order of tens of big generators that can be dispatched from a central room with 5 or so people in it. And that, of course, is no longer true. So that's another challenge. The third challenge is really a good thing, but it's also a challenge, is electrification. And we may not hit the 5x number, Jagabanta, that you mentioned. I think it's more like 2x in the US, maybe even a little bit less. It depends on electrification of transportation, heating and cooling, and then, of course, industrial loads. But those are, as I sort of like see it, some of the key challenges that we face in decarbonizing the electricity grid. So then maybe, and there is so much more under each of these. I'm not going to show any charts as it relates to this. I'm very happy to follow up with folks on that. Then maybe sort of like, what do I see as the necessary changes? And I was sort of like looking at the 2 other presentations to see, I think some of this maps pretty closely. I think I focus this mostly on power markets. So I'll call out, for example, that what I'm not talking about is one big need in the United States is transmission build out, because the United States has a sort of like political economy in which decisions tend to be made by states or maybe even by counties. That's a very big problem. I'm not calling that out here, but it definitely is. If you're interested in that problem, I would recommend the book Superpower by Russell Gold, which speaks about one entrepreneur's sort of like attempt to try to build cross-state grids. But when we sort of like leaving that aside, if I focus on power markets more, I think that there are sort of like 3 big challenges. I think the first is to reward flexibility. So I think as we go to these kinds of markets with high degrees of variable renewables, we need different kinds of market products than just energy output, megawatt hours. And those things need to be valued in some kind of way, so that there are incentives to install new flexibility, which could come from storage or flexible demand. It could come from many directions. So I think that's one sort of like market change required. The second one is to incentivize renewables. I don't know whether this is too much in the weeds for this audience, but the way electricity markets work, at least in the US and Europe, is that they typically clear based on all the bid prices of different generators and then the demand, and the whole market clears at one price. And as the marginal generator, so the thing that is setting the price, becomes renewables, those renewables typically bid in at $0 per megawatt hour, because there is no fuel cost for those renewables, which means that the whole market in those hours or 5-minute intervals gets paid nothing, $0, sometimes even negative. And this, of course, is a problem if you are a solar or wind asset owner, because you built that asset under the assumption that you're going to get paid for the electricity that you produce. And that is no longer always true. And so we need new ways to compensate for these renewable assets, because back to the goals, we want to add 1 gigawatt of new renewables globally till 2030 and 1.5 from 2030 to 2050 to get to 100% decarbonized power grid. So that's a big challenge. And I posted a question actually in Slido, Jagabanta and Juan, because I'm curious to hear if that's similar in China and India. Maybe the third challenge, or the third sort of like shift that I would highlight, is sort of like the need for distributed participation in power markets. So as we have more behind the meter solar and battery storage, and it's still like in its infancy in the United States, those things can add value to running the grids reliably, but there aren't always ways to compensate those resources for the sort of like ideal behavior from a market perspective. So for instance, right, I'm here in San Francisco, I know that the San Francisco Bay Area has several tens of thousands of behind-the-meter battery systems. In San Francisco, we have now for a few summers had big heat waves for which the power grid basically is shut off, the distribution grid, so-called public safety power shutoffs. And when that happens, you could actually potentially keep power on certain distribution feeders live if you have enough backup power and you have the right kind of electrical infrastructure. But there may not always be an incentive to do so, and the physical wiring may not be right. And so I think that there are solutions needed there too, to incentivize those distributed resources to help the entire grid. So those are maybe the sort of like key things that I'll say. And then I had some slides about this, but I actually think I'm going to skip that. I'll just give you the sort of like one-line summary, and we can go into the Q&A, Liam. So I came from RMI, right? And that's where I spent 5 years of my career, and I was studying very similar questions to Yuan and Jagabanta. And I had before that worked in software, and I had sort of like seen that there is, tremendous need for innovations as well as for research. And I specifically saw that as we're going to this electricity system that faces the challenges that we all spoke about, there's a need for a clear view of the near future to ensure that the system is run reliably at low cost with carbon-free electricity, and that there are no real good solutions to do so. And so together with a co-founder who I knew from my time at Nest, the thermostat company, we started Mist now 3.5 years ago or so to be that sort of like foundational layer of near-term predictions for everything from solar and wind production to energy demand to market prices, to enable, from a technological perspective, individual market participants to participate in markets well, and really kind of like be a layer to enable for a carbon-free, high renewable penetration electricity grid. And so with that vision, we're building a company that now serves 3 of the world's largest 5 electricity companies, and is sort of like growing rapidly to enable owners of solar farms, wind farms, battery storage, and load serving entities to run their grids reliably at low cost. So Liam, with that, maybe I'll hand it over to you.
Amazing, thank you, Tishan. So yes, really helpful insight, and clearly a really important piece of the puzzle that you're working on there at Mist. So yeah, thanks for that, and thanks for joining us. So folks, I'll put in the chat one more time the Slido, but I'm also aware that it's already absolutely full of some great questions. So I know we won't get through them all, but we'll do our best, and maybe I'll collate some of those that get left over and see if I can ask our guests to throw some bits in after the fact. But the first one that came through, and I think it's hopefully quite a quick one, but somebody asked, and this will be for Yuan, is the carbon price in China expected or intended to rise over time? Because I think most people would agree that it's not high enough at the moment for the kinds of things we want to see. So is the plan that it will rise, or is it expected to?
Yeah, sure. Thank you everyone for the question. I think it's a good one, and we get asked that question a lot these days, because at $10 per ton is really not meaningful in a way for carbon price to work. So this is purely my speculation, because carbon market is set in China to let the market determine. But right now, I think I would say 2 factors will impact the carbon price. And my outlook for carbon price is to increase, of course, in the future. And it is because first, China's carbon market only currently includes the power sector, which means other high intensity emissions industries are not included yet. So as those sectors continue to be included to participate in the national market, we think the price will increase, because there will be more and more demand for carbon allocation. And the second thing I want to mention is the current design of the carbon market. To put it into simple words, the government now allocate certain amount of carbon allowances freely. So they give kind of initial allowances for power companies to emit carbon for free. And those are set at a pretty high level, which means many power plants don't need to buy additional allowances to meet their emission targets. And those are expected to be revised and updated in the future. So I think by looking at those two factors, first, more sectors will join China's carbon market. Second, the current mechanism will be updated to a more market-based mechanism. I think the trend is for carbon price is to increase.
Thanks, Yuan. That's helpful.
To you, Lam.
Yeah, thanks. A quick one for Jagabanta that we probably could unpack and spend all day on, but just a really quick kind of viewpoint. What's the viewpoint in India about nuclear power? We heard a speaker the other day saying that it's on the table, it's being discussed, but what's the kind of the general sentiment from a policy side or from a community side around nuclear in India?
It's never been off the table, and I can unpack this a little more. And then again, with nuclear, it's always politics and who comes to power, who doesn't come to power, and the optics around it. I was covering nuclear energy quite a bit in my first job, especially after Fukushima and everything. China and India remain one of the two large countries which still thought, were never really took the feet off the pedal in terms of pursuing nuclear. India has, not beyond decarbonization, has strategic goals when it comes to growing its nuclear industry, and because it's one of the few technology development that we have done completely indigenously because of the political atmosphere that was there after some of the nuclear tests. So and then we do have an ambition for nuclear, at least what we call a thorium-based reactor program that we have been pursuing as a country, which could potentially allow for a nuclear energy technology that's is highly energy secure, because we have some of the largest reserves of thorium in the world. So the short answer is it's never been off the table. Now, what happened in terms of the change in focus is that the previous, the present government, when it came into power in 2014, the push became a lot more towards renewable, and rightly so. But as you know, there is a need for there will be a role for nuclear because of the fact that it's a baseload power plant and the way it's operated. And whether it will be the scale that was, of a certain scale or not, that's a very different argument. We can argue about that. But it's there. It's there as a technology option. We have both plans to deploy domestic technology, domestically engineered technologies, as well as also get international developers to come. But again, there are politics, especially the NIMBY are politics around it, not in my backyard, when it comes to deploying nuclear technologies. And the second thing is to do with the optics. Post Fukushima, globally, nuclear has had a bit of a issue with the managing this thing. But the challenge, the last point I wanted to make is, what will challenge the role of nuclear is the fact that renewable cost drastically is coming down, and so is battery storage cost, and with combine and its ability to offer firm electricity, that even though as I say, there is nuclear on the table as a country, the scale at which it will come probably will be potentially could be much lesser, just because of purely on the economic basis now. So that's where I would probably pause. It's a lot to unpack. You're right.
Sure. Thank you, Jagannatha. And that's a really good dipping our toes into that question. So I wanted to maybe ask a question that Shalini put into Slido, and I'll ask it to to Tishan first, but maybe then we'll open it out. And it's a bit similar to a question that I wrote myself that I was going to ask you, and it touches on the point you made, Tishan, about those lots of small scale battery storage happening in your neck of the woods in San Francisco. So we've had speakers before at Terra, such as Harish Hande, who talks from Celco, who talks about how like the big mega grid, every single thing being connected to the grid isn't necessarily the right way to go. And actually in smaller towns or in more rural areas, you're actually much better off, and you'll be more resilient if you have your own sort of small local grid or self-sufficiency with storage. And Shalini asked in the context of India, but I guess it applies everywhere. Is it a goal to be more centralized and consolidated and have everything under one umbrella, or although it might be a bit more complicated, is it going to be easier to solve some of these problems if things are more decentralized and distributed and broken down onto like smaller geographical levels? So Tishan first, and then we'll check in with the others as well.
Yeah, thanks, Liam, for the question. I'm very curious to hear others' thoughts. My sense is that the answer to the question really depends on the starting point and what you're trying to optimize for. So it's quite easy to make a blanket statement or along the lines of, we need 1 gigawatt of new renewables a year, utility skills solutions, so hundreds of megawatts on transmission grids are faster from a project deployment standpoint, thus they are the way to go. I think it's much more nuanced than that. Because, for example, if you are in a small town in a certain Indian province, or for that matter, if you're in a rural place in Texas, where there is no real good distribution grid, it obviously makes a lot of sense to use carbon-free or low-carbon distributed solutions, whether that is some sort of like gasifier of rice husk, or whether that is a solar panel with battery storage or something else. So I think Harish's point is totally, I would stand behind that. But I think that honestly, we need both. And I think maybe for different reasons, and also for different things you're trying to optimize for, right? Because a big part there is we want everybody to have access to electricity to power things like a fridge or communication devices or whatever it is. And that to me is as important as keeping the world global warming to 1.5 degrees. So I optimize for both of those things.
Sure, thanks, Tishan. Let's go to Jagavanta and then to Johan.
Chime in. I think, of course, Tishan's point is perfectly valid. It depends on what you're trying to optimize for, for a more nuanced answer. I think one point that I just wanted to raise is from the perspective of resilience beyond all the rural electrification part of it. You are definitely going to start requiring and needing the need for what we call islanding, systems property where you can island a grid out, systems property where you could make certain consumer segments, which are critical loads, continue to be available for electricity because the larger grid may be able to shut down. So from that perspective, there is a big role for microgrid, mini grids, and DRE applications along with battery energy storage. And that's going to get more and more important. People are not accounting for it as much as we would like to. I think there are pilots that are happening in India around, which I never thought would be done by a grid operator on urban, what you call urban microgrid, essentially trying to see whether there are microgrid arrangement, which on a normal basis will be plugged into the grid, but can also operate as a distributed resources at a time of certain conditions that could allow for certain consumer segments to remain lights remain on.
And that's an interesting concept. It's not even talking about the rural part or the electrification part that Harish Hande clearly mentioned and made sense. So there is a definite role for DRE from a lot of perspective coming forward. But from the perspective of pushing ahead for deployment of the 450 gigawatt of solar, as Tishan just mentioned, like putting that 1 gigawatt or that 100 megawatt utility scale is much easier. The second point I also wanted to add is like, when you're trying to integrate all that high level of renewable at that scale, you definitely want to leverage a lot of geographical variation across demand profiles, across generation patterns, etc. So some degree of interconnection will eventually serve you well when it comes to integrating that amount of renewable. But the last point I wanted to make is, of course, when it comes to one problem where renewable is helping solve majorly in India, or at least attempting to, is the problem to do with rural agricultural pump, which is also where a lot of the subsidy happens. Now the government has this massive program called Kusum, PM Kusum program, which is essentially how do you solarize your agricultural feeders and agricultural pumps. And that is done, that is being incentivized both as a distributed mode as well as a grid connected mode. And there are a lot of advantages to that kind of way to deploy renewable. And it's a really big scale if it's doable. It's doable. Slower to deploy, of course, but the scale is huge if you're trying to solarify all your agricultural pump. The advantage is that those agricultural consumers who otherwise would have been tied to the grid and being provided free electricity, they are given incentive to go off the grid indirectly for those certain use cases. And those agricultural pumps, which were otherwise would have been provided subsidized electricity, are able to tap onto solar power to power those pumps, which allows for to solve, back to my slides, the whole problem around subsidy, highly subsidized sectors on the agricultural demand management, etc., without actually unruffling a lot of the political feathers. So there are a lot of advantages to both, and both are required. That will be the, especially when it comes to the Indian context as well.
Thanks, Yagavanta. And finally to Johan.
Yeah, I think agree with the two panelists. Want to echo what they have said. Maybe just one additional point. So for China, we've seen a very strong push for distributed energy in the next 5 years in the official documents, both at the national and provincial level, and mostly due to the kind of mismatch between the load center and the supply, kind of renewable energy supply zones. So I think the trend to develop more distributed energy is inevitable. But at the same time, we also see China building more high voltage transmission lines to connect those to the grid. So I think those two things will definitely happen at the same time. Yep, back to you, Len.
Great, thank you, Yuan. And thank you, Yagamanta, and Tishan as well, who I've seen has had to drop off. So I'm conscious of the time. I'm very conscious it's late in India and even later in China. Thank you so much to everyone for coming and for the great questions. I'm very aware that there's a bunch of questions that didn't get answered, but I will try and collate those. And if there's any that the panelists can answer quickly and easily by email, I'll get those back, but no pressure if it's too much. Again, thank you, everyone. And I hope you have a good rest of your day.